Hi, everybody, and welcome. I'm Leslie with the New Mexico Small Business Development Center, and I'm here with Peggy McDonough. And we're so lucky to have her. She is a SCORE certified mentor, which is one of our resource partners. And she has so much information to impart on PPP, EIDL, and employee retention tax credits. What's the next step? Are you tax ready? I want to remind everyone, if you have any questions, we're here, Peggy's here to answer those. We're going to hold off on the questions to the end, but go ahead and type them into the Q&A. As soon as the presentation is over, we'll pick up the questions. You can look at the number in the bottom right-hand corner of the presentation if you do want to write down the slides, and we can revisit that. We're not going to be monitoring the chat, so just remember, type the Q&A. We will also send you a copy of the presentation when we get done. It'll probably go out either this afternoon or the next day. So look for that. And again, if you have any questions after you get the presentation sent to us, email me and let me know. I will turn it over to Peggy.
Thank you, Leslie. As Leslie mentioned, I'm a SCORE certified member. I have over 30 years worth of experience and industry experience in both finance, manufacturing, and program management. I'm also a certified management accountant. So that gives you a little bit of my background. Now, SCORE and New Mexico Small Business Development Center, we're working in collaboration to provide small business owners with professional training and support. So we hope that in today's webinar, this is an example of this collaboration, and we hope you'll find your time today productively spent and very useful for your business. So as Leslie mentions, do not use the chat function. We won't be monitoring it. Write your questions in the Q&A feature in Zoom, and we'll address all the questions at the end of the seminar. Now, SBDC is prohibited from giving tax or legal advice. So any tax-related questions, accounting questions, and specific questions about your company situation can only be answered by a credible authority, by your accountant or your attorney. So please keep in mind, the information we're covering today is changing rapidly and is based on a current understanding of the programs. It can and likely will change. Although we will be monitoring and updating this webinar as new information becomes available, please do not rely solely on this for your financial decisions. We really encourage you to consult with your lawyer, your CPA, your payroll expert, and your financial advisor. So what do we want to accomplish today? What are the expectations? Well, I'd like you to walk away from this webinar with a better understanding of the tax impact for various COVID relief programs that have been signed into law by Congress in the last year and a half. So we'll be starting with the Coronavirus Preparedness and Response Supplemental Appropriation Act that was signed into law March 6th of 2020. And we'll work our way to ending with the most recent American Rescue Plan Act, which was signed and extended by President Biden on March 30th of this year. You should leave here today more knowledgeable and with some guidance on what questions you need to be asking your CPA, your tax attorney, or your payroll professional in order to make the best decisions for your business. We're going to focus on 3 specific programs. We're going to go over the PPP, which is the Payroll Protection Program. We're also going to discuss the Economic Injury and Disaster Loan Grants, as well as the Employee Retention Tax Credit. We're going to be reviewing the timeline and background, going over some of the tax implications for each program, as well as some frequently asked questions. And as I said, at the end of today's webinar, we'll be addressing any questions that you may have. So let's start down this path. So on March 6th of 2020, Congress signed into law the Coronavirus Preparedness and Response Supplemental Appropriations Act, quite a mouthful. The act declared the coronavirus or COVID-19 outbreak a disaster under the Small Business Act. And this opened the door for the Small Business Administration to use its lending authority to make economic injury disaster loans, or what's commonly called EIDLs, for small businesses that have been impacted by the pandemic. Just a few weeks later, on March 27th, was the CARES Act, the Coronavirus Aid, Relief, and Economic Security Act, and it was signed into law. Now, what that did is it created the Payroll Protection Program, and it provided nearly $349 billion in PPP loans. In early May, Congress provided an additional $320 billion in funding. It also introduced, with the EIDL, it also introduced the grants to pay Small Business Administration EIDL applicants an advance on their EIDL loan. Now, these advances were treated as tax-free grants and did not need to be paid back. The funds were exhausted very quickly. Then there is the Employee Retention Tax Credit that was also created. The ERTC, or sometimes called ERC, is a fully refundable tax credit for employers equal to a percentage of qualified wages, including qualified health plan expenses, that eligible employers pay their employees. Then in December, on the very end of the year, we had the Consolidated Appropriations Act, and it was signed into law. Now, embedded inside of that act was an additional $900 billion in COVID relief. There was $300 billion in aid for small businesses, $284 billion to SBA for first and second, what we call first and second draws for PPP forgivable small business loans, as well as $20 billion to provide EIDL grants to businesses in low-income communities. On March 11th of this year, we had the American Rescue Plan Act of 2020, and that was not $1.9 trillion. That was voted on March 10th and signed by President Biden on March 11th. Among other things, it provides small business assistance, including specific programs for restaurants and live venues. And last but not least, on March 30th, the Ppp Extension Law was signed, and that extended the PPP application deadline. So what exactly does this mean with this changing environment and a lot of the money that Congress has signed for COVID relief for small businesses? It has an impact on a lot of organizations. The IRS is impacted, the Small Business Administration, banks, CPA, and of course you as business owners. The Treasury and IRS tax laws and guidance have lagged. So as Congress has signed into law, the guidance that we need in order to interpret that law has lagged and is confusing, and in some instances has even been contradictory. There are new forms, there are new applications, there's confusing interpretation in a constantly changing environment, and this is still going on. This means you're going to have to deal with business situations and tax implications that you've never seen before. So let's start with the first one, which is the Payroll Protection Program. Now, the PPP is a loan, and it's designed to provide a direct incentive for small businesses to keep their workers on the payroll. It extends from 8 to 24-week period, and the first draw was in the CARES Act. Now, PPP loans can be used to help fund payroll costs, including benefits, and may also be used to pay for mortgage interest, rent, utilities, worker protection costs related to COVID-19, uninsured property damage costs caused by looting or vandalism during 2020, and certain supplier costs and expenses for operations. Unfortunately, when this was first provided by the CARES Act, the money was scooped up by large businesses very quickly, leaving the really small businesses unable to apply. And that's where they came up with the second draw. And that happened in the Consolidated Appropriations Act in December. That allows certain eligible borrowers that previously received a PPP loan to apply for a second draw PPP loan with the same general loan terms as the first. The application submittal for PPP ended May 31st, 2020. So what we're in now, if you have a PPP, you're in what's called the loan forgiveness portion of this law. So what is the loan forgiveness clause? Well, it is a buyer can apply for forgiveness once all loan proceeds for which the buyer is requesting forgiveness have been used. Now, buyers can apply for forgiveness anytime up to the maturity date of the loan. If borrowers do not apply for forgiveness within 10 months after the last day of the covered period, then the PPP loans payments are no longer deferred and borrowers will begin making loan payments to their PPP loan lender. Now, please understand that you can apply for forgiveness. You need to work with your PPP lender. The SBA does offer free counseling and training events to help you with the Paycheck Protection Program if you need further and additional detail. And you can get onto the www.sba.gov website, and it's got a wealth of information, and I highly encourage you to go out there and look into it. Now, the CARES Act spells out that the forgiven loan amount won't be included in taxable income. You don't pay taxes on the money that you receive. This loan is to provide businesses with the money to keep running and continue paying employees, not to create a tax burden for the businesses that receive the funds. With the passing of the Consolidated Appropriations Act in December, there was more clarity on how the expenses covered by a PPP loan will be treated. Previously, anything you spent your PPP loan on was not going to be tax deductible. Now, these expenses are tax deductible, and simply put, your PPP loan will not affect your tax filing process. Historically and forever, if you have a business loan and it is forgiven, that automatically is taxable income. It's been in the IRS code forever. However, with the PPP loan, they break from that code. Congress specified, and the IRS has clarified, that forgiven PPP loans will not count as income. This applies whether your entire loan is forgiven or just a portion. But the loan is to provide businesses with money to keep running and continue paying employees. It was never meant to be a tax burden for a business. Simply put, your PPP loan will not affect your tax filing process. Now, though Congress has walked back the IRS stance on the PPP and its relation to deductible income, that doesn't mean you can leave those funds out of the conversation on your 2020 and 2021 taxes. Whether you receive PPP funding in its first iteration or later on in 2021, you should still be very careful when it comes to taxes. And there are still a lot of unanswered questions, and some of these questions stem from confusion in the PPP application process. In some cases, application woes meant businesses received money they weren't qualified for in the first place, not because of fraud, but because of misunderstandings. For an example, a company might have stated that it had employees when it only had independent contractors. While that seems like semantics to the layperson, that kind of difference could make major implications when it comes time to file business taxes. How your funds are used is also extremely important to keep in mind. Any money that the business owner used to pay something else that was not included in the PPP requirements will have to be reported as income and expenses on their business tax return. So it's imperative that you have clear and concise bookkeeping. Your signed PPP loan contract stated you would produce monthly, government-ready financials. You are required to have bookkeeping in place. If you don't, you could suffer penalties and fines or trouble with an audit. So it's a smart idea to have separate accounts to identify your PPP loan. For example, other income PPP loan, not non-taxable. But it is also important to adjust your tax planning estimates to include any PPP expenses that were formerly non-deductible. If you received a PPP loan, expect a tax audit. Now, in recent months, the SBA and the US Treasury have announced that all PPP loans in excess of $2 million will be audited. Loans that are less than $2 million, which is the majority, are subject to an audit. And much lower loans have been, will be continue to be scrutinized. So bottom line, there is a higher probability that the IRS will audit you. And they've also developed a hotline for anonymous callers to report possible fraud. So how do you ensure a smooth audit process? Well, please don't procrastinate. Begin compiling your documentation as soon as possible. Keep all your records, your receipts, your statements, your payroll records, and PPP documentation. They should be kept on file for at least 6 years after your PPP loan is fully repaid or forgiven. Make copies to send, but always retain your originals, and hire a CPA who can represent you and defend your business against IRS if necessary. Now, before I go into frequently asked questions, I wanted to bring to your attention a couple of changes that have happened just recently. The Small Business Administration has developed what's called a forgiveness portal, and that was actually rolled out on August 4th. And currently there are about 340,000 businesses that have applied through this portal. And you can get on that portal if you go to the SBA.gov website. Now, in order to apply through that portal, your lender has to have opted in to using that portal. And right now there are about 1,300 lenders that are using that portal. Now, what's the purpose of it? The purpose of it was small lenders didn't have the money to develop their own portal. The administrative paperwork was just overwhelming. So the Small Business Administration developed this portal to help those small businesses. And if you have a loan that's under $150,000, you can apply through this portal if your lender has opted in. The big banks like Wells Fargo or Chase Manhattan, they usually have their own portal and they won't be using this particular forgiveness portal. Now, the nice thing about this portal is it only takes, if you get on this portal, you put in your EIN number or your Social Security, and you put in your loan amount and some other various information, and it will automatically populate the form for you. Now, it only takes 5 to 10 minutes to fill out this form. And from word on the street, I haven't talked to anybody that's actually can tell me this, but from word on the street and everything I've seen online, the SBA will get back and either approve your forgiveness or your lender will approve your forgiveness within a week. So the process is you go on the web portal, that information, you fill out the form, the information goes to your lender approves it. And if your lender approves it, then they send it to the SBA and the SBA approves it. And in some cases, if you pass what they call a COVID test, which will allow you don't even have to put in any documentation, which is really nice, but you have to pass this approval. So check with your lender. If you go out to the portal, there is a PDF file out there that has a listing of all the lenders that have opted in. But probably the easiest way is to go to the portal, put in your EIN, put in the information it asks for, hit the return, and it'll say either your lender has not opted in or it'll carry you through. Now, lenders should be contacting you if they do decide to use this portal, but they may be behind in informing people. So it's kind of a nice option that you can have if you want to get forgiveness and get that money to you as quickly as, or get that forgiveness to you as quickly as possible. Now, usually of all of the PPP loans that have gone out, 93% of them are less than $150,000. So there's a lot of activity on that. So let's go back to frequently asked questions. Does my PPP count as taxable income? No, as I discussed, no funds from your PPP loan, whether forgiven or unforgiven, are counted as taxable income. You will also be able to claim a deduction for expenses using your PPP funds. If my PPP loan is not forgiven in full, does that mean it counts as taxable income? As with other business loans, funds from your PPP loan that are not forgiven do not count as taxable income. Can I write off payroll and other business expenses if I used a PPP loan to pay for them? If you received a PPP loan and your loan was forgiven, you can write off payroll and other expenses that were paid for with these funds. Expenses that were not paid using PPP funds can still be written off as usual. Even if your PPP loan was not forgiven, payroll and other business expenses can be written off on your tax income. Now, according to SBA, almost every business that has applied for forgiveness has gotten approved and gotten all of their funding back. So it looks really positive out there right now. Can I use my PPP loan to pay business taxes? No. Funds from your PPP loan may only be used to cover payroll costs, utilities, rents, or lease payments or mortgage interests. PPP loans can't be used to pay business taxes. Can I defer payroll taxes and receive a PPP loan? Businesses that have received a PPP loan can still defer payroll taxes through the end of 2020 and 2021. And again, will PPP loans be audited by the IRS? And according to the US Treasury, all loans over 2 million will be audited, and you are subject to an audit if you're under that. Now, one of the things that is under the federal, what I've been talking about is primarily federal taxation. You need to talk to your tax accountant about the state taxes. Now, we happen to be lucky. We live in New Mexico, and in that particular state, forgiven PPP loans are not taxed. But please confirm this with your CPA to make sure that that hasn't changed. As I said, some of this is a moving target. So let's talk a little bit about EIDL, or the Economic Injury Disaster Loan. Now, the EIDL is a loan option and it's available through SBA. So instead of like the PPP where you have to go through a lender and then the lender goes to SBA, with this you go directly to SBA to help, and it's made to help businesses that are struggling with financial hardship due to COVID-19. Now, EIDL loans have been available for years, but the EIDL loan for COVID was signed into law in March of 2020, and it was passed by Congress, and it was meant to provide emergency relief specifically because of the impact of COVID-19 and the pandemic. So if you are a small business, a nonprofit organization of any size, or a U.S. agricultural business with 500 or fewer employees, and you've suffered substantial economic injury as a result of the COVID-19 pandemic, you can apply for a COVID-19 EIDL loan. And again, as I said, these loans do not go through a lender. They come directly from SBA disaster assistance, and it is no cost to apply. So I know that there's a lot of fraud out there in which companies are saying, pay me this much money and I'll apply for an EIDL loan for you and save you some money. Please understand that a lot of those are fraudulent. And it's not a difficult process to do for you personally to go right through SBA and apply for the loan yourself. There's no cost to you as a business. So again, the EIDL is a loan, and it is treated the same as any other business loan as far as taxation is concerned. In other words, funds from EIDL are not reported as taxable business income on your tax return. So what is the EIDL grant? Now, there are two types of grant. Small businesses may be eligible for what's called a targeted advance grant, and that's for up to $10,000. And also some businesses may be eligible for what's called a supplemental targeted advance of $5,000. These grants do not need to be repaid, and the SBA is now encouraging all eligible businesses to apply. Now, the grant program was part of the initial CARES Act, but funds were exhausted within weeks. So in December, Congress allocated additional funds for the program, and they took the grants and they established a more targeted eligibility. In other words, to get more down to the small businesses that really needed these grants, and they were targeting them. So to be considered for one of these grants, your business must meet eligibility requirements, and you have to also have applied for an EIDL loan. However, You do not need to get or accept the loan in order to receive the grants. So let's talk about how you can qualify for one of these targeted EIDL advance grants. You need to be located in a low-income community, and you need to have suffered an economic loss greater than 30%, and you have to employ not more than 300 employees. In addition, you need to qualify through what's defined as an eligible entity in the CARES Act. Now, again, this is small business, cooperative, ESOP, tribal concern with fewer than 500 employees, an individual who operates under as a sole proprietorship with or without employees, or as an independent contractor, or you need to be a private, nonprofit, or small agricultural cooperative. The business must have been in operation by January 31st of 2020, and the business must be directly affected by COVID-19. So let's talk about a little bit of this terminology. So what does economic loss mean? It's the amount by which the gross receipts of the covered entity declined during an 8-week period between March 2nd, 2020 and December 17th, 2021. And you need to compare it to a comparable 8-week period immediately preceding March 2020 or during 2019. How do I demonstrate economic loss? Well, getting your business tax documents organized and up to date will be essential to applying for this grant and demonstrating that you qualify. What is a low income area? Well, the SBA has released an online tool to help borrowers understand if they're in a low income area. And please note that it's the business address and it must be located in a low income community in order to qualify. So SBA encourages potential applicants to check the map to see if they meet the low income community eligibility requirement before you apply. And that can be found at the SBA.gov website. What you do is you type in your zip code and it comes up with a map and you can find with the streets and you can find your address on that street grid. Well, what exactly are the new supplemental grants, the new 5,000 supplemental grants? Well, that was brought into law during the American Rescue Plan in March of this year. And it includes $5 billion in funding for supplemental targeted advances of 5,000 to the hardest hit businesses. So how do you qualify for that? Well, you need to have suffered an economic loss of greater than 50% and employ not more than 10 employees. Now, this supplemental grant is in addition to the $10,000. The SBA will reach out to small business owners who have applied for the EIDL and for the targeted advance if they appear eligible for the supplemental grant. Getting your business tax documents organized and up to date will be essential for applying for this grant and demonstrating you qualify. So what are the tax implications? Well, initially, funds from EIDL advances were to be reported as taxable income, and that was stated in the CARES Act. They reversed this under the Consolidated Appropriations Act in December of last year. It does not need to be included in your taxable income when filing your taxes. And additionally, qualifying expenses can be written off to lower your tax liability. Legislation clarifies that EIDL grants are not taxable at the federal level, that businesses who receive them will not be denied a tax deduction for qualified expenses paid for with these funds, and that EIDL grants will not be deducted from PPP loan forgiveness purposes. So please check with your tax advisor about tax implications, both particularly at the state and local level. Will EIDL loans be audited? Well, when you received your EIDL loan, you agreed to spend the funds provided for certain business expenses. As part of the loan agreement, you agree to maintain records and provide those records to the SBA to be audited if necessary. While there is a chance you may not be audited, please don't skip this step. Maintain your records and be prepared to respond if an audit occurs. Does a grant count as taxable income? In most instances, grant funds are not counted as taxable income on your federal tax return. So how do I qualify for a targeted EIDL grant? If you previously applied for an EIDL, an economic injury disaster loan, you will receive an invitation by email inviting you to apply for the targeted grant. If you have not yet applied for EIDL, you can do so at sba.gov. If your business appears eligible, you'll be invited to apply for the targeted advance. You do not have to accept the EIDL loan or even be approved for the loan if you get the grant, if you qualify. What if I never applied for EIDL? If you have not previously applied for EIDL, you may apply at sba.gov. You will be able to apply for the low interest rate loan through December 31st of this year, as long as funds are available. If it appears your business also qualifies for the targeted advance or supplemental advance, the SBA will invite you to apply. Now, I want to interject at this point that we have in Congress something called the Infrastructure Bill. And it's quite a large bill, over $3 trillion. And it is in the process now of being reviewed by both Congress and the House. And in that bill, in the current structure, there is a clause in there in order to help fund for this large infrastructure bill. They're going to sweep up any EIDL funds that have not been marked or distributed. So it does take Congress quite a while to get these things passed and put into law. So I don't think this is going to happen overnight. I don't even think it's going to happen in September probably, but you probably have maybe 30, 60, maybe as much as 90 days. Don't quote me on this because you know how Congress is. It goes back and forth and back and forth. And there's a lot of discussions that still need to be made. I want you aware of it though, because if you do want to apply for these grants, I would do it pretty soon in order to get your name in the button, get your money before these funds are swept up by Congress in order to pay for the infrastructure bill. Can an EIDL loan be forgiven? No. EIDL loans, not advances, must be repaid over 30 years. They're unlike the PPP loan. There is no forgiven process for these loans. Can I also apply for the Paycheck Protection Program? Yes, this is great. The Paycheck Protection Program may be fully forgiven if they are spent on certain expenses, primarily payroll, which essentially turns them into a grant. Note that, of course, the PPP loan program is now closed to new applicants. However, if your business received a PPP loan, you may still be eligible for an EIDL loan or grant. Businesses basically may apply for both if they qualify. So the next section I want to talk about is the ERTC, the Employee Retention Tax Credit. This is a great program. The Employee Retention Credit is a tax credit first put in place last year in the CARES Act as a temporary coronavirus relief provision to assist businesses in keeping employees on the payroll. Since then, through the various other acts that have been signed into law, ERC has been significantly expanded. And in the most recent relief bill in January, the ERC has been extended for all of 2021. Now, I will also interject at this point that also in this infrastructure bill, there is a statement where Congress is talking about shutting this program off in September of this year. Again, there's a lot of discussion that still needs to go on, but currently it is one of the qualifications to help fund the infrastructure bill. So there are different rules between 2020 and 2021. In 2020, you had to have 100 or less qualified FTEs, full-time equivalents, employees. And in 2021, they upped that to 500 or less. In 2020, the tax credit was up to 50% of $10,000. And in 2021, the tax credit is now up to 70% of $10,000. Now, this credit is available to businesses with fewer than 500 in 2020 or 100 in 2020 employees who either suspended or partially suspended their business due to COVID-19 because of a government order, or not both, but or experienced 50% for 2020, a 20% for 2021 decline in gross receipts when compared with the same quarter in the previous years. Now, there are a series of New Mexico government health orders in 2020 and 2021. Each order was effective for different dates and sometimes for different businesses. For details on which businesses were impacted or who was impacted and the dates when these orders were effective, please go to the newmexicohealth.org website, and it has a listing of all of the governor's orders, the dates, and who was impacted. Tax credits are incredibly valuable because, unlike a deduction, which reduces your taxable income, tax credit reduces your tax liability on a dollar-for-dollar basis. The credit is calculated per employee, and in 2021 is 70% of up to $10,000 in qualified wages paid per quarter. And again, that includes also health benefits. Qualified in wages include the portion of your employee's earnings that you paid and is reported on your IRS Form 941. Is this tax deductible? Well, in a way, yes and no. Wages on the claim credit must be reduced by the amount of the credit, which results in the credit somewhat becoming taxable income. Reduction in wages may also impact Section 199A eligible wages for purposes of the 20% quality business income deduction. And if the credit is claimed on 2020 payroll taxes, after the tax return has been filed, an amended income tax return may be required to accurately exclude wages that were reduced for the ERC. And most important, and the takeaway from this particular slide is there is no double dipping between PPP and ERTC. So what do I mean by double dipping? Well, let me give you an example. Now, this is a theoretical company, something that came right out of my head. And we're going to be calling this company STAR Technical Support. They're a small business in Roswell, New Mexico. And when they compared their quarter 2 of 2020 to quarter 2 of 2019, STAR experienced a 55% decrease in gross receipts. Now, in order to qualify in 2020, a greater than 50% decrease had to have been met. The business qualifies for 2020 ERTC. But in quarter 2, STAR also received $12,000 of PPP. STAR has 5 employees, and each full-time equivalent employee is paid $8,000 per quarter, and that includes health insurance benefits. In quarter 2, STAR paid their employees $40,000, which is their 5 employees times their $8,000 a quarter, and that equals the $40,000. So here's how the math works. 50% times 40,000 is equal to $20,000, but you have to subtract out what STAR received in their PPP, which is $12,000. But that still gives them a credit of $8,000 for quarter 2 of 2020. Here's a second example. Again, another theoretical company. We have Fred's Fantastic Car Wash, and they're located in Los Lunas. When comparing quarter 1 of 2021 to quarter 1 of 2019, Fred's Fantastic Car Wash experienced a 25% decrease in gross receipts. Now, in order to qualify in 2021, you have to have a greater than 20%, which Fred's has, so the business qualifies for the ERTC. Fred has 10 employees, and each employee is paid $7,000 per quarter. Quarter 1 of 2021, Fred paid their employees $70,000, which is the 10 employees times the $7,000, which equals $70,000. This year, the ERTC is at 70% of qualified wages. So 70% times $70,000 is equal to $49,000 in ERTC. And that's an annual estimate of $196,000. Quite a nice benefit for Fred. So here's an example of what's the difference between the 2 years and how much this has improved in 2021. The number of employees was increased to 500 from 100 to 500. The gross receipts decrease was from 50% to 20%. And the wage credit per employee is also 50% to to 70%. So you can see there's quite a lot of improvement between 2020 and 2021. So how do I file? If your business was not in existence in 2019, you can still use the average quarterly wages that were paid in 2020. You cannot use the owner's pay or the owner's relative's pay when calculating wages. Now, there's a lot of discussion out there, so you need to clarify this with your CPA. This particular credit, this ERTC, has a lot of nuances. So you need to be very careful and read it very carefully and work with your payroll professional. You file to apply for this credit using your quarterly form 941. And if you want to apply in advance, there's a form out there, a new form. It's a $7,200 advance payment of employee credit due to COVID-19. You can use that form. If you haven't taken advantage of the ERTC in either 2020 or so far in 2021, you can file retroactively, and you use form 941-X, again, another new form, adjusted employees quarterly tax return. How do I file? How do I have to file for tax credit? How long do I have to file for tax credit? The latter of 3 years after the original filing or 2 years from paying the tax. Please get professional guidance on this and support when filing. There, as I said, there are a lot of nuances in this, and you need to get advice from and help from your payroll expert, preferably a professional who is well-informed and on current interpretations and laws. This is another one that keeps moving and changing. Now, while the ERC is certainly a taxpayer-friendly relief provision, the IRS isn't just giving dollars away. So they are looking at taxpayer submissions, both on the front end and then auditing down the road. So the best practice is for the business to provide contemporaneous documentation now when first determining whether they qualify. To avoid headaches and heartaches down the road, businesses need to have counsel to properly and fully document and paper how the business qualifies for the ERC. Business owners need to be aware as to whether their company qualifies for ERC, and please don't miss out on this terrific tax incentive. So here are a few of the frequently asked questions about this particular program. I can't claim ERC if I've already claimed PPP or gotten my PPP loans forgiven. Now you can claim both. That came into law in March of this year through the Consolidated Appropriations Act. It removed the limitation on only claiming one or the other. PPP will only account for 2.5 times your monthly payroll expenses and is meant to be spread over 6 months. This leaves plenty of uncovered wage expenses for claiming ERC. My business did not have a drop in gross receipts of 50% or more. The Consolidated Appropriations Act has also changed that and has changed the qualification so that a reduction of 20% now qualifies. But also remember, there is another way to qualify for ERC. If your business has been subject to a partial or full suspension due to a government order, you can qualify. So again, it's not, you have to have both, it's either or. My business was not shut down during the pandemic. Even a partial suspension order by the government, federal, state, or local of your business could potentially qualify. A partial shutdown, a disruption in your business, inability to access equipment, having limited capacity, shutdowns of your supply chain or vendors, reduction in services offered, reduction of hours to accommodate sanitation, shutdown of some locations and not others, and shutdowns of some members of a business are all scenarios that still potentially qualify for ERC. Key considerations are due to the government ordered partial or full suspension is that your business was not able to continue its activities in a comparable manner, and did that result in a more than nominal impact on business operations. Remember, the partial or full suspension is an alternative way to qualify for ERC, separate from the reduction in gross receipts. My business was deemed an essential business, so I do not qualify because of the business suspension. Even if your business is deemed essential, An impact or change in your business may still qualify you. For example, even if you were open, but your vendors were closed down, or you can't go to a client's job site, you may still qualify. Or alternatively, if part of your business was considered non-essential and was impacted by government-ordered suspension, you may also qualify. My company has grown during quarantine. This isn't something I should take. Well, it's great news that your company has grown. If your company has grown during quarantine, but experienced a full or partial suspension, there are expenses that may qualify you. Sales have rebounded for us in Q1 of 2020. I can't qualify for this credit. With the introduction of the CAA in March of this year, you have the option to look at 1 quarter prior to determine qualification. This means you can determine eligibility based on lost revenue in 2020. Also, if you were subject to a full or partial suspension, you may qualify regardless. We were in losses or do not have any tax liability. This is a refundable credit. In practice, this means that any credit overage above your tax liability is sent to the taxpayer or the business owner as a refund. My company has grown to over 500 employees, so we are not eligible for ERC. The employee count restriction is based on full-time equivalent employees, which is a more involved calculation than just counting everyone in your office. If you paid any employees to not work or to work less than the hours for which they were paid, then the employee count restriction would not apply for these employees. I'm a charity and the ERC is only for businesses. The ERC may also provide significant benefit to charities, churches, nonprofit hospitals, museums. Charities can be particularly good candidates for ERC. Please remember that the tax man will cometh, and the ERC is a refundable tax credit. It provides robust benefits. If you had to draw up a tax provision that makes the IRS lie awake at night, it would be a refundable tax credit involving real dollars. Again, there are a lot of nuances in filing for this credit. Make sure you work with your payroll professional to make sure you get the full credit that you are eligible for. So let's go over a little bit of a recap. So what is the process? Congress votes, they enact laws, they provide government funding. The IRS, the SBA, state and local governments, they interpret the law and the tax implications. New forms are created and reporting requirements. The CPA follow these interpretations and provide guidance to you as a taxpayer. What's the result? It can be confusion and it can be restating and clarification. That is part of the reason why the 2020 tax filing moved out to May 17th of this year. There was a second round of PPP. There were changes in the employee retention credit. There was continued stay-at-home orders, making it difficult to access taxpayer data. And quite frankly, the IRS is short of staff due to COVID-19 pandemic. Year 2020 and 2021 taxes are likely going to look a little different than they normally do. This means you're probably going to deal with situations you've never seen before, including forgiven loans, grants, and unemployment benefits. So it's imperative that you have accurate and up-to-date set of books, such as your balance sheet and your income statement. You track and categorize all of your business expenses on both the balance sheet and the P&L. Your receipts and invoices should be digitally filed and recorded, and take the time because it's well worth the effort to be able to see where your money is going and ensure that you'll be able to get the most of the eligible deductions come tax season. Again, please keep in mind this information is changing rapidly and is based on a current understanding of these programs, and it can and likely and has changed. Although we will be monitoring and will be updating as new information becomes available, please do not rely solely on this presentation, which we are going to mail out to you for your financial decisions. We encourage you to consult with your lawyers, your CPAs, your payroll experts, and your financial advisor. But make sure that whomever you consult with, that they are up to date on the most recent guidance from SBA, IRS, or the US Treasury. All right, Leslie, we're into the Q&A section of the webinar, and it looks to me like we have a couple of questions out there.
We do. The first one is, I was asking a tax representative about what programs could help our restaurants. The New Mexico tax representative told me about the House Bill 100.39 that would allow us to have the gross tax returned to us for the months of March through June. I or our CPA never heard of this opportunity. How can I be better informed?
Well, that's actually a good question. That's a little bit outside of this webinar. If you went to your CPA and they were not aware of it, and your other professionals were not aware of it, I would continue to ask questions. I don't know if you have another CPA that you can also get informed, or if your current CPA, ask them to please research it, because that's an important aspect to get your NEMGERT, as they call it, some sort of relief on that. So I would continue to poke. I would continue to prod. I would also look on the New Mexico websites that are out there to see if you can find additional information.
Thank you, Peggy.
Mm-hmm.
Also, what is the interest charged for EIDL loans?
The interest at this point for an EIDL loan is 3.75.
Okay, we have.
Now, it may be a little different if you're a nonprofit, but for an average business, it's 3.75.
Here's another question. We are an S Corp with 3 employees and 2 of us are owners, husband and wife. And our 3rd employee is our son. We all receive a salary pay, and my husband and I also take an owner draw. Does this mean we cannot get the ERTC?
Yes, it is my understanding, based upon current interpretations. Now, that is still being discussed. So, and there's a lot of new information coming out, but please check with your CPA, because it currently, most CPAs that I've talked to or experienced have said that it's still, you cannot take that as an ERTC if they're either a relative or an owner.
This is going to be the last call for any questions coming in. I want to remind everyone you'll get a copy of the presentation slides. You'll also get some resources. We do have this available for 7 days on demand, pre-recorded, and then we will upload it to our YouTube channel. I chatted over the link to everyone, but it'll also come to you after the webinar. If you do have any questions that you think of after you receive the slides, we're lucky enough to have Peggy for a little bit longer. So bring them into the next webinar and we can pick them up then. We have a whole series of webinars. I'm sending out the calendar to everyone now, and we have 30+ webinars on all kinds of aspects for your small business through the end of September. So watch for that. And again, all our webinars right now are no cost to you and your small business. Peggy, do you have any last thoughts?
Well, the only one thing that I want to mention at this point is, first of all, to thank you all for attending. I really appreciate your attendance to this webinar. So what's next? Well, hopefully you'll be able to take the information that we've given you, go to your CPA, ask some pretty pointed questions, or your payroll expert, ask some pretty pointed questions, see if they can help you get as much of the money as possible that's out there for you. And as I understand it, the EIDL loans also with the Smaller Business Administration, there for a while, there was a real lag in them. They seem to be catching up and getting through their backlog, but be the squeaky wheel and continue to push at the SBA representative in order to make sure that you can get these grants if you do qualify for them. So hopefully you found this presentation and this webinar informational and effective. Thank you.
Thank you, Peggy. And thanks, everyone. I hope you have a great rest of your week, and we will see you at the next webinar. Thanks.